Today's focus: exploring Petronas Gas's future growth strategies. Could this be another key driver to push the composite index past 1,600 points? Welcome to KLCI AI, your personalized Malaysian stock strategist. The information shared here is for learning and reference purposes only and is not any buying or selling advice. Please assess your own financial situation and risk preference before investing. Today's main share is about the hidden growth opportunities in Petronas Gas for the future. First, 52 megawatt power plant. Petronas Gas is expected to commence operations of a 52 megawatt power plant in Sipitang, Sabah by 2026. This power plant will significantly increase Petronas Gas's production capacity in the energy market. By generating its own electricity, Petronas Gas will be able to better meet the power demands of industrial and commercial customers, while also opening new revenue streams for the company. Entering into power production allows Petronas Gas to expand its operations from solely supplying and processing natural gas to generating electricity. This diversification reduces the company's reliance on a single type of energy, enhancing the stability and profitability of the business. Second, new gas compression station. Petronas Gas plans to start operations of a new gas compression station in Kluang, Johor, at the beginning of 2025. The new gas compression station will increase Petronas Gas's gas transmission capacity, enabling the company to transport natural gas more effectively from production sites to consumption areas. This not only improves the efficiency of the existing pipeline network, but may also support the transportation of natural gas over longer distances. By increasing transmission capacity, Petronas Gas can expand its service area to cover a broader region. This will enable the company to enter new markets and serve more customers, particularly in areas that were previously unreachable due to transmission capacity limitations. Third, expansion of LNG storage capacity. Petronas Gas has set up a new floating storage unit in Pengerang, Johor, to increase future LNG storage capabilities. With the global increase in LNG supply, expanding storage capacity enables Petronas Gas to increase its import volume and further supply natural gas to the Malaysian domestic market through its regasification terminals. This capacity is particularly important for meeting the growing energy demands within the country. Larger storage facilities allow Petronas Gas to expand into new markets and regions, especially in other Southeast Asian countries, bringing new sources of revenue and increasing the company's competitiveness in the global LNG market. Fourth, utilization of cold energy. Petronas Gas has installed an air separation unit, ASU, in Pengerang to explore new opportunities for cold energy utilization. Utilizing cold energy can significantly improve the energy efficiency of the entire LNG regasification process. By recovering and utilizing the cold energy released during LNG regasification, Petronas Gas can reduce additional energy consumption, thereby lowering operating costs and improving overall efficiency. Utilizing cold energy reduces the additional energy input needed during cooling processes, which is particularly important in hot climate conditions, and these cost savings can translate into higher profit margins. Effective utilization of cold energy opens up new commercial applications and services, such as in data center operations, where a major source of energy consumption is their cooling systems. Could Petronas Gas find new commercial applications in data centers with this technology? We welcome your comments and thoughts. Latest company news analysis. According to a report by The Edge on May 3, 2024, it was mentioned that Petronas Gas's price increase has been approved. Here are some details of the adjustments. The PGU transmission pipeline rate has been increased from RM 1.063 per joule per day to RM 1.096 per joule per day, an increase of approximately 3.1%. The supply of high-pressure gas to Singapore has been raised from 1.614 per joule per day to RM 1.7001 per joule per day, an increase of about 5.4%. The RGTSU rate has been increased from RM 455 per joule per day to RM 3.465 per joule per day, an increase of about 0.3%. The RGTP rate has been decreased from RM 3.165 per joule per day to RM 3.150 per joule per day, a decrease of about 0.5%. Although the overall increases are modest, the adjusted tariff rates will directly increase the revenue of Petronas Gas. This is positive for the company's financial performance, especially in the gas transportation and regasification business sectors. Capital Game Analysis. First, let's take a look at the capital game analysis for May 6, 2024. This analysis is divided into 6 categories: retail investors, large retail investors, super retail investors, institutions, large institutions, and super institutions. Retail investors had slightly more sell orders with 21, large retail investors had considerably more with 250, and super retail investors had slightly more with 43. On the other hand, institutional buyers were more active with 159, large institutions slightly more with 51, and super institutions slightly more with 35. This analysis indicates that smaller market participants, such as retail, large, and super retail investors, were more inclined to sell, likely taking profits at higher market levels. Conversely, institutions, large institutions, and super institutions showed more buying activity, indicating that larger market participants are optimistic about the market or specific assets. Institutional investors' buying behavior is often based on extensive research and a deep understanding of market trends, suggesting confidence in future market developments. This analysis is based on yesterday's trading volume, trading prices, and the total difference in orders, so results will vary each day. If you don't want to miss exclusive capital game analysis, please subscribe to our channel and ring the notification bell. Thank you for your support. If you would like to receive capital game analysis for specific sectors or companies, you can find my WhatsApp link in the description below. Fundamental analysis of Petronas Gas. From a fundamental perspective, Petronas Gas has relatively low valuation risk, slightly low cash flow risk, and moderate debt risk. According to its latest quarterly report, the company has a growth opportunity of 60%, and based on the dividend analysis of the last 3 years, Petronas Gas has a dividend chance of 60%. What is cash flow risk? Higher cash flow risk indicates less cash available to the company, meaning that currently, Petronas Gas has a healthy cash flow within the entire Malaysian stock market. One reference for cash flow risk is operating cash flow, which represents the net cash generated by normal business activities over a certain period, measuring the cash flow obtained from core business activities. Why is cash flow risk so important? Because cash flow is the lifeblood of daily operations. If a company cannot generate enough cash flow to pay bills, wages, raw materials, etc., it may face operational interruptions or even risk of closure. Technical analysis of Petronas Gas. From the technical analysis of Petronas Gas, its risk of being manipulated is relatively low in the overall market. Its stock price risk is moderate, and its volatility risk is slightly low. Looking at the capital game analysis over the past year, retail investors had more sell orders at 471 with an average sell price of 17.203. Large retail investors had more buy orders at 754 with an average buy price of 17.293. Super retail investors had more buy orders at 1,417 with an average buy price of 17.293. Institutions had more buy orders at 36 and 33 with an average buy price of 17.321. Large institutions had more sell orders at 546 with an average sell price of 17.466. Super institutions had more buy orders at 26 and 69 with an average buy price of 17.487. What is stock price risk? Higher stock price risk indicates a greater likelihood of a price correction, meaning currently, Petronas Gas has moderate stock price risk in the Malaysian stock market. One reference for stock price risk is the difference in total buying and selling volumes over the past year, essentially the total buy volume minus the total sell volume. Why is stock price risk so important? Because it can help you avoid buying at high prices. In conclusion, I would give Petronas Gas a business outlook of 70%. As the global economy gradually recovers from the pandemic, particularly in Asia, energy demand is expected to grow. As the monopolistic provider of natural gas infrastructure in Malaysia, Petronas Gas has the opportunity to expand its market share and sales. In fundamental analysis, I would rate the risk as 4 out of 13 and the opportunity as 6 out of 7. As for technical analysis, I would rate the risk as 5 out of 13 and the opportunity as 2 out of 7. If you do not understand your risk tolerance and investment objectives, you can scan my WhatsApp QR code to contact me. Everyone is welcome to share your opinions below, and let's discuss together. Thank you, and I'll see you in the next video.